let's look at the markets, big picture mode. First off, read this disclaimer carefully. In this video, we will first go here and look at stock markets, and we will look at a country in South America. Chile is the candidate. This is the distance from the 52-week lows, from the 52-week highs. And here we get some data on Chile. The GDP, the consumer price index change, total tax rate, 33%, and the forested area, 24%. Okay, the ETF in question is the ECH iShares MSCI Chile ETF. Let's first look at the charts. This is all the data we have here using investing.com. You can see that there's been a rather serious bear market. Okay, so after the financial crisis, Chile had a big rally, 214%. But that bull market ended here remarkably in the later part of 2010. This is just one example of how the post-financial crisis bull market it has not been that global. As a matter of fact, what we are seeing is that there's a shockingly few very strong companies that are lifting the Nasdaq and the S&P 500. There is tremendous weakness and decay underneath. We have plunged below the lows of the financial crisis. The bears have been on a total rampage from this high to this low here, minus 67%. That's a deep bear market. Very dramatic here for Chile. But this is where we need to change our mind a bit, okay? The bears have already had a big fill, meaning it is time to think like a contrarian. Could this be a very great opportunity to get Chile at a massive discount? We will look at that quite soon. From a purely technical standpoint, the bears are in charge. We have seen these tests above the 10-week moving average here, and here, and they have failed, meaning the current attempt, we need to see support, okay? We need to see the bulls being able to rally off the 10-week moving average here in pinkish. That's the weeklies. There's a negative minus 43% correlation with the S&P 500. We're looking at the accumulation distribution line. It did make, let's zoom out a bit. The low it made back here in 2016, it is much lower than where we are now. Hence, that could be a sign that some of the more sophisticated money are seeing value in Chile. Let's go to the daily data point. Let's load the data here. We are below, the key moving averages, like the 200 and 100-day moving average, sharply negative. The 50-day moving average, if you look back, test fail, meaning people, for good reasons, are very skeptical about the 50-day moving average. From a technical standpoint, in order to get a rally going here, we need to see it used as a bounce level. We cannot have it break. So keep your eye on the 50-day moving average. Yes, that's the technicals. If we look a bit at the seasonality of this ETF, so this is the percentage of months in which it closed higher than it opened from 2016 to 2020. We see that September is a particularly good month for Chile. July is also rather decent, 75%. Hence, you could make the case, given that we are going towards, the mid part now of May, there could be some time on the horizon now to get into Chile. If we do let's actually do some cycle analysis, because there are some clear cycle patterns here. Let's go here, like that. Okay, here I have done some cycle analysis on the weeklies. Rising, declining, rising, declining, rising, declining. You can see that there are these actual rising, declining cycles here. Given the cycle patterns that are, reasonably consistent, I mean, this is some obvious cyclicality. We could be entering a rising cycle soon. Let's look at some performance. Year to date, minus 30%. The last year, minus 42%. Some deep red numbers here. However, the dividend is very juicy, okay? 3.54% dividend. That's good. If we go here, you can see that the expense ratio is not too crazy. There's not a lot of competition in this space. It is the only ETF that tracks the Chilean market. The assets under management, $345 million US, meaning this is a bit more esoteric, but that opens up opportunities. Average daily dollar volume, $12 million US, some decent liquidity. This is when things get really interesting, okay, and that's when you look at the price earnings and price book. Let's of course compare it to the benchmark, which is the S&P 500. Okay, you can see here that the PE ratio is 9 for Chile. For USA, represented with the S&P 500, if we can get the data, where is it? Okay, for some strange reason it's in the middle here, but here it is to the side. That's strange. Anyway, the PE ratio for America is a whopping 18.9 for Chile. Okay, so Chile is literally it is half of America. The price book ratio is 2.7 for USA. It is 0.94 for Chile, which is a really good price book. Dividend 3.53. Dividend here is 2. You could make a pretty strong case here for the Chilean market. There's value. When you look at the companies, you have a bunch of utilities. They are relatively safe. Financials, okay, maybe a bit risky. Basic materials. Consumer non-cyclicals, they are characteristically lower risk, lower beta. Very interesting composition here of the companies. Banco de Chile, Enel Americas, Banco Santander, and some companies that I have heard of. Energia Energica sounds energy or utility-ish. Rather interesting. Now we will have a short segment about how you can be a shape-shifting investor. And then finally we will look at the other markets. We will look at, some commodities, bonds, stocks, basically to get some picture of what's happening. The shape-shifting investor. Let the trend be your friend means you should primarily act like a bull during a bull market, but also be able to become a bear when that ends, meaning be shape-shifting. Like this butterfly. So do not be an optimist or pessimist, but be a pragmatist. Be mostly bearish in a recession, but it's smart to also have bullish positions. The benefit of having, a more market-neutral portfolio is that you have your pulse on the bullish and also the bearish case. Of course, during a bear market you definitively want to lean bearish, but it is prudent to have at least some bullish positions, because without that you can get into trouble when a bull market begins and you are very committed to the bearish thesis. You play an important role in the market by being able to do both. You sort of become a referee. The Security and Exchange Commission, they officially support short selling. that is, profiting from falling prices. And your gains are improved if you can capture the best days and avoid the worst days in the market. Some professionals, they certainly like to be overall market neutral, like yours truly, and that is also called being delta neutral. It is best achieved and easiestly achieved by being diversified across multiple asset classes. We are talking bonds, stocks, commodities, forex, cryptos, physical value like gold, even artworks, and to nibble a bit also at the derivatives market. To sum up Chile, you could definitively make a fundamental case for Chile, certainly. From a technical standpoint, we did see some very clear cycle patterns. Could be that we are entering a new rising phase. We haven't seen significant evidence for that yet, though we were deeply oversold at this low. Actually, we haven't been this oversold. I think we actually set a record. Well, the deepest level here was 30 RSI. Here, well, let's look at, okay, RSI here was 18, RSI here was 18, okay, so we actually were, this is the most oversold we have ever been on this ETF, right here. Okay, so that was Chile. Let's now look at some of the other markets. Let's look at the S&P 500, what's happening here. We did slip below the 20-day moving average, but were frantically able to reclaim it. Hence, we do have this major standoff here between the bulls and the bears. But there's quite clearly been a significant weakening here on this buy. But the bulls, they have a strong tendency to fight back. Hence, it would take a significant catalyst to really create a sell-off. But I am definitively in the camp that, for all intents and purposes, we are in a clear bear market. And the S&P 500 and the Nasdaq, they are not as strong as they look, because you have a few very big and powerful companies that account for most of the rally. This is the total world stock market ETF, the WT. Here we are seeing similar deterioration. Looking at the bond market, the BNDX, total world bond market, a major rally here of the lows, reclaimed many of the moving averages. Let's actually do a bit of let's actually do one of these Fibonacci retracements, like that. So here. Yeah, we did get above the 61.8 retracement. That's pretty darn good. So the bulls, they are in control here, a bit in consolidation mode. If we go here to, let's go to the commodities like gold. Gold has seen a very strong rally, huge rally here. Very impressive gains. First major move, consolidate sideways, and then we make the next push. There have been many people talking about a correction in gold, because from a technical standpoint, we do expect a correction. Mean reversion is definitively a thing. The problem is that when you have a situation when there is a lot of bulls that have invested in gold, and the people sitting on the sidelines, they are bulls waiting for a pullback. The longer we go without that pullback, you will have the sideliners stepping in to buy, which pushes the prices up. Hence, we could get in this wonky situation where we actually do not get that pullback, because people just want to get in, and you're not going to sit too long on the sidelines due to the fear of missing out. And this push here, it could definitively spook a lot of the sideliners into just getting in. But longer term, it makes a lot of sense to have a pullback, but yeah, so far the bulls are definitively in charge. And the GDX, the gold miners, I mean, a very sharp breakout, very solid breakout. Let's look at let's actually look at the DBA. Let's go to weekly data points. The DBA has been a total disaster, extreme bearishness. Maybe it's so extremely bearish that it's bullish, but we haven't seen that yet in the charts. Let's go back to the daily data points. Let's now look at energy. Let's actually look at XLD because there's so much chaos in the energy commodities. Okay, we've had a major rally. Let's measure the rally like that. That's 61%. That's really good. There is a bit of a weakness now, but we are above. Yeah, I mean we are close enough to the 20-day moving average for the bulls to be kind of in control. But there is a risk of a pullback now for sure, given that we are struggling with some of the weaker moving averages, like the 5-day moving average becoming a resistance level. That is definitively a sign of the bulls having a bit of a fatigue. And you can see here that the accumulation distribution line, it has weakened, even though price action has risen, meaning there is definitively some buyer fatigue. Let's now look at what should we look at? Maybe we should have a bit of a look at Forex. Let's look at the dollar index. Major consolidation sideways. There is some attempt here at a breakout. The thing is that when it comes to the dollar, it is all about how strong it is vis-a-vis other currencies. Hence, when we do have a situation where the major markets around the world are rather weak since the 2008 financial crisis, and the companies that have been lifting the key indexes have been these American companies, then you get this situation in Forex where there's a lot of broken markets around the world, but the American market is slightly less broken. That's how you could have a significant strengthening of the dollar, even though there's problem everywhere else, and also problems in the USA. But the strong rally we have seen in gold, it is rather impressive. And I do think that gold is the only real money out there. And it is a monetary system that has survived the rise and fall of many civilizations. The dollar is a baby compared to gold. Okay, let's look at some other things. Let's look at the TLT, the 20-year plus treasury bonds. Yeah, okay, we've had a bit of a pullback here. The buyers have stepped in, testing the 20-day moving average. A bit of an aggressive buying happening on Friday, but we were not able to close above. So this is one of those classic, standoffs between the bulls and the bears. Let's look at Bitcoin / US dollar, like that. Yeah, let's look at this one. Okay, a very significant rally here of the lows. We are heading into this major resistance level, major battle zone in the past. Here is where we fell. We do have a lower high. There is a risk of a double top. Hence, it is very much in the interest of the bulls now to have a significant move to close above this level. It might be that, given the RSI recently being quite elevated, it could be prudent to consolidate a bit sideways and then make that final push. The issue with the Bitcoin market is that this is a highly emotional market. A lot of people who are in the get-rich-quick mentality. Hence, there is a risk that we're going to have this pullback instead of a sideways consolidation and then the move. The mature and intelligent way to break out above this level would certainly be to have a bit more of a consolidation sideways, because that will reduce the RSI, and then you will have enough energy to actually make the breakout, because a breakout above this level here, that would be really a strong sign for Bitcoin and could become self-reinforcing. Yeah, those were some of the markets. Very interesting times, and Chile is definitively looking rather interesting and is a country to have on your radar going forward. Whatever you do, of course, let the trend be your friend.